Okay, so this presentation will be on the impact of government fiscal policy, which is spending and taxation, on business. We're going to be looking at three different things: impact on business of government spending, impact on business of tax policies, and impacts on business of the difference between them, which is the budget surplus or deficit. For the last 20 odd years, we've been looking at a budget deficit. We look at government spending. Government spends more than £2 billion every single day. Most of that goes on benefits, health or education. And obviously the impact of that on business is going to be dependent upon the type of business. So if, for example, the government is spending on health, which the current government proposes to do big time, proposes to build loads of hospitals, then if you're a building firm or you're a pharmaceutical supplier or a supplier of medical equipment, at the moment I'm talking during the COVID crisis, so they're desperate to pump out ventilators and things like that. So if you're a provider of a ventilator, you should find your sales rising. Similarly with education, the EdExcel exam board is owned by a company called Pearson, who also sell loads of educational books. So if the government is spending shed loads of money on education, then you're going to find that your sales are going to rise. If we look at taxation, taxes can either be placed on people or firms' incomes. Obvious example is income tax, but also national insurance, of which the worker pays a bit and the employer pays a bit, or corporation tax that's placed on firms' profits. Taxes that aren't direct taxes, would you believe, are indirect taxes, and that's placed on people's spending. Again, VAT is the obvious example. You go to McDonald's, part of the cost of that meal is going to be VAT that goes to the government. And there are excise duties as well that are placed on specific items. So you buy some petrol, there'll be petrol duty. You buy a box of ciggies and there's going to be tobacco duty. You go on a plane, there's going to be air passenger duty. If we look at how direct taxes affect business, if, for example, income tax is cut, the reason why I'm saying cut is that over the last 10 years, income taxes by and large have been cut, then the impact on workers is when they go home at the end of every week or month, they're going to have more money in their pockets, so they're likely to spend more. So you're likely to find that sales of firms will rise. And obviously the firms whose sales will rise the most are those that sell the income elastic type goods. If we take the other big direct tax of national insurance, broadly speaking the same as income tax, but if we take corporation tax, that's a tax on company profits. Again, that's been going down over the last 10 years or so. If the government is receiving less corporation tax, and that means firms have got more, and there's two things that firms can do with the money. They can either hand it out to shareholders in the form of dividends, or they can retain it within the business, which are going to use for investment. So it's going to be good for firms. If we look at the impact of indirect taxes on business, on the whole, over the last 10 years or so, these have tended to rise. Take two examples. If we take the general example of VAT, if VAT goes up, then firms are likely to increase their prices, so their sales are likely to drop, dependent upon the price elasticity of demand. There's probably not going to be a big shift between firms because most firms will be hit by an increase in VAT. If we look at excise duties, then logically the people who are going to be most affected by an excise duty rise are going to be the firms producing the product themselves. So if cigarette duty goes up, then it's going to hit cigarette firms. When the government introduced sugar tax, then it's going to be hitting those firms who have sugar in their product. Those are likely to increase their prices. So sales are likely to fall, but again, don't get too hung up on this. Don't say that a firm might lose its advantage, because if, say, you're Cadbury's and you're faced with an increase in tax, also Mars going to be faced with that same increase in tax in Ferrero Rocher and Hotel Chocolat or whatever. So, be a little bit nuanced in what you're saying. How might firms deal with this? Well, they could, if they want to avoid paying the tax, they could change the product or alternatively change the market. Example down the bottom of your screen there is how Ribena added sweeteners because they didn't want to pay sugar tax, so they actually changed the nature of the recipe. The trouble for that, and again, this wasn't taken by every firm that did that, but in this particular case, they found their sales were hit quite heavily because their customers didn't like particularly the new taste, and so there was a big movement against that. Another thing that you can do is you can try to change where you are selling your product. So over the years, tobacco duties have been rising in the West generally. So tobacco firms like British American Tobacco have targeted those parts of the world where the taxes are not quite so bad. So for example, they've increased their sales in Asia or Africa. So though there's going to be fewer people dying of lung cancer in the West, if you're in one of the poorer countries of the world, I'm afraid you're not going to be quite so well off. Finally, I want to look at the impact on business of the budget deficit. The reason why I'm saying that there's a budget deficit is that diagram on the right hand side of your screen shows you that by and large the government spends more than it earns in taxation income. Sometimes it borrows really big time. If you look at 2010, you can see that it was borrowing more than 10% of GDP. Now remember, GDP is more than £1 trillion. So 10% of GDP means that they were borrowing more than 100 billion in that particular year. The figure for the coronavirus impact is likely to be even more than that. Impact on business generally is if the government is spending, that tends to be quite good for business. Sales are likely to rise. However, if you look at the years where the government does borrow big time, those don't tend to be good times for the economy. It's borrowing to combat the recession or combat the coronavirus. So at the moment, for example, the airlines are getting rid of workers, even though the government is spending so much, because they think that for the next few years, demand for air travel is likely to fall.